This is the Friday, July 19th, 2013 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
All right, thanks, Mike.
One of the topics we didn't get a chance to talk about on the show was cotton. Saw a nice little rally, $1.10 up this week. What's driving that in cotton?
Cotton's got a demand and a supply issue. The supply issue is it's been hotter than the daylights in Texas, where a lot of cotton's grown, and their crop has deteriorated pretty badly. You've seen it in corn. Their corn crop's been down, the rating's down there, and it's also been affecting their cotton crop. So you got that supply issue counterbalanced by the predominant buyer of cotton is China, and China has backed off a little bit on their purchasing of cotton. So apparently this week the problems in Texas sort of overbalance the problems with demand. I think you're stuck in a trading range from 82, 83 up to 86, 87, and you bounce around in that trading range, and I don't see it doing much beyond that. So make sales if you get up at the upper end of the range. And
going to have to get to harvest to see really which problem outweighs the other.
Exactly.
Okay. All right. So if you need to, 86, 87, make your sales
yeah.
and be ready to see what happens as we roll on down the line.
Yep.
All right. Now, we have had a lot of questions this week. We talked about it on the show a little bit, the lack of rain. I mean, this, I know in some parts of central Iowa, we've been on about 3.5 weeks without rain. What are you seeing in the rest of the country? What are you hearing from customers? How does the crop look in Nebraska, Iowa, South Dakota?
Well, like I said on the show, Nebraska has declined some. I don't know how much it can decline when they're pouring water on most of it. So, I mean, the downside there is probably somewhat limited. Everybody else, it would be nice to have a rain, but all that rain this spring did really replenish subsoil moisture. So there's a pretty good tank to draw on. This dry weather has pushed those roots down, so that's maybe a benefit to some extent. But we do need to rain, and we don't really want to go into the pollination period with a problem. So I think that they're right. It's worth watching pretty closely, and is going to be the market factor the next 2 weeks.
And it is going to be a mover if we get rain or not rain.
If we get the 1 to 2 inches of 70% plus coverage that's being forecast by some, this corn market's probably may be done for the year.
Okay. All right. Now, as we're talking corn market in 13, we were talking earlier about land rent values and how to best anticipate what are we seeing with land rents. How do you handle these high rents in a lot of places as we look to the future? What's the best way to market and plan your operation to deal with those rents should they continue? When
you talk about rents, there's two problems with the rents. Number one, the landlords are reluctant to drop rent. They're slow to do it. Mm-hmm. Number two, farmers understand that the only way to success for them is to control land. So they're reluctant to give up any land either. So having said that, I would expect if rents soften, they're probably not going to soften by very much. So you have to go out and look, okay, how do I assure myself that revenue? Well, we had revenue insurance this year at a relatively high level, so a lot of people didn't worry about it much. Next year, that's probably not going to be the case. If we have 4.25 to 4.50 corn, like I've talked about on the show, then you're probably going to drag December of 14 corn down there too. Now, December of 14 corn actually got as high as 5.55 last week, which was within a dime of the revenue assurance price that we scored for a 13 in February. So to me, if you think your rents are going to be high, you want to actually assure yourself income. I think you need to look really hard at selling that corn, December 14 corn, somewhere between 5.30 and 5.65, and do some kind of a scale-up program or something. Because if we come into next year with a carry in of 2 billion bushels, 2014 corn is going to struggle.
It's going to have a pretty low ceiling on the December 14 prices come next year.
And the income you're used to getting is going to go away kind of quick.
Very quickly. Yes, indeed. Now, we do have a couple of questions from cattle producers. Jared in Seldom Rest, Oklahoma, is asking, as we look out in cattle, when is the herd rebuilding really going to pick up steam and limit the supply of cattle on feed? Jerry
would probably have a better handle on that than I would, but it looks to me like it's really hard for these cow-calf guys to think about doing that when they're getting these fancy prices they're getting for the calves. I mean, you got to be really well heeled and go, okay, I'm so well heeled, I think I can pull a few calves back to start an expansion. And I'm not, I don't know the exact date of when that's going to happen, but I don't think we're quite there yet. Now, maybe when this calf crop gets sold, we'll finally be to the point where that happens. And he's right, that is going to be another supportive factor for the market. But I think we're a ways off from them being well enough heeled for that to happen.
Producers would like to see us touch maybe in that 157 mark, sell some calves, and actually have some black ink on some paper.
Exactly.
All right, so that's something to keep in mind. Now, as we're talking feeders, as we look out again, how is the supply shaping up currently, as looking through the rest of the summer and into fall?
I mean, I think the calf crop is pretty good. The contraction's over, so we've stabilized the herd. And I think for those that have feeders to sell, you're gonna get a good price for them. The future's just telling us that. So I don't think there's a lot to worry about in that respect, anyway.
And now, how has the cash market been relating to futures recently, as we look at August cash or recent cash sales?
As usual, they've been a little ahead of the futures. I mean, that market really is driven by the guys sitting out at the sale barn bidding, and they keep it pretty stout.
All right. Now, you mentioned on the show crude oil prices being a major factor in people's consumer spending, in everything that we do. What is your take on the situation currently in the Middle East? Are we going to get some relief from these high crude oil prices anytime soon?
Well, the Middle East is one of the big driving forces, and particularly Egypt, and the concern about the Suez Canal is one. The other one is the fear of a dust-up between Iran and Israel. And those two factors are really driving forces in keeping that crude oil. Now, those that aren't so bullish crude oil are looking at domestic production in the U.S. at 21, 22-year highs, saying, wow, we need to have drop crude. The heck with those guys over there. And that's the path we're on. We're probably a few years away from that being the case. But I don't really see, unless shots begin to be fired, I don't think we'll have a tough time staying above that 108, maybe 110 level. And then the other side of that coin is, are we going to continue? How is refining going to be? We had 2 or 3 refineries have some problems around the country this week, so we started to see gasoline prices go up. As soon as they go up, demand goes back, and all of a sudden gasoline inventories are building a little bit again. So I think the consumer is really sensitive to any increases in gas prices that come along, and I don't know. That's the way it looks to me. I'm not real optimistic that you're going to see a lot more drop in gas prices at the pump going in through the rest of the summer.
All right. Well, not a very optimistic note, but we'll let you go with that. Thanks for being with us, Tom.
You bet. Thanks, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will have experts get you expert answers. Thanks for watching, and have a great week.